please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. It's 12 noon and we are halfway through the trading session. A perfect time to take stock of the day so far and the top stories. I'm Lata Venkatesh. With me is Sumaira Abidi. Sorry, Sumaira. Well, actually, the markets have not given as much by way of a trend. It's fortunate that they are not trending lower as they threatened to at the end of the first hour. But it's really meandering in no man's terrain. It's quite possible that in the last hour you will get a little more in terms of gains, because the Fed has traditionally been dovish and favourable to stock markets, and we could therefore expect the same to play out again in the last hour of trade. It's so flat that even the advanced declines are 1:1.
Yeah, that's true actually. So not a lot happening, but we'll take you through all of the market action so far. Here are our top stories. Market remains sluggish near the day's low. Auto stocks drag. Reliance and L&T fight for the bulls. Mid-cap index trades in line.
Divi's Labs rallies after management clarifies that all previous observations for its Unit 2 are complete and resolved. 6 new observations have been received from the latest inspection, which are understood to be procedural in nature.
Tata Steel and ThyssenKrupp sign a memorandum of understanding in a 50-50 joint venture for the European assets. Market awaits clarity on amount of debt to be transferred to the joint venture.
Big win for Reliance Jio as telecom regulator slashes call termination charges. Telecom incumbents Bharti, Idea and Relcom were sulking in trade, but they have recovered.
And tire stocks surge after India imposes anti-dumping duty on new Chinese radial tires used in buses and trucks.
Well, we have plenty of movers and shakers as we take stock of the markets halfway through the trading day. And to start our movers and shakers segment, obviously, is that pharma stock which has been keeping investors on tenterhooks for the past 1 week. Divi's Laboratories. Ekta, tell us the full story of what's the relief.
Well, just to give you a background of the news first, remember that Unit 2, which has an import alert or had an import alert, still has from the US FDA, which was issued to them in March of 2017, got re-inspected by the US FDA. So that inspection lasted from 11th of September and got completed yesterday, which was the 19th of September. So the company came out with a press release and it stated 2 things in the press release. First was that all previous observations for Unit 2 are completed and resolved. So that means that the 5 observations that they had received in December of 2016, the first inspection by the US FDA, which culminated into an import alert, have been resolved as per the company. Plus, now in this new inspection, the company has received 6 observations, and they have said that these observations are largely procedural in nature. So that basically is the crux of the information. Unit 2 is 20 to 22% of sales when it comes to the US business. And I did pick up the kind or the nature of the observations from sources as well. It's basically one observation which is related to clarity on batch sheets, one observation which is related to additional test on a product, 2 observations related to cleaning, and 2 additional observations related to procedures. So it seems as though net-net, the company will likely, take another step to probably remove the import alert. That is the next step that we'll be watching out for closely. As of now, this is the news on Divi's Labs.
Okay, well, the big talking point is going to be telecom, but I just wanted to address the flashes that you saw on your screen. No, before the day's high was being advertised. There was a public interest litigation against over-invoicing of coal and other equipment inputs by several companies, Adani, SR and some ADAG group companies among them. But the High Court hearing the case, the PIL has not refused to issue notices to these companies or to the government on allegations of over-invoicing. The High Court has said that more deliberations are needed before it takes any action. And the case, I think, is next going to be heard on September 25th. So maybe a minor relief, but I don't think people are too worried. In any case, it didn't show in the stock price. Well, with that, to the stocks of the morning, as it were, the telecom stocks. Varinder, important to note, Bharti is now in the green.
Yes. Lata, if you just see Bharti charts since last, 2-3 weeks, when we've been hearing about that, the interconnect usage charges will be cut. The stock had fallen, nearly 50 rupees from those highs, what Bharti had seen. Even Idea, has fallen nearly 20% from the recent highs. So people were expecting or in anticipation that this will come, people were prepared that, this measure will be taken. Of course, the financials of the companies will be hit. Of course, Q2 will be bad for telecom companies. But the important thing, what market analysts are seeking to know is that how much, what Reliance next step could be. Why? Because importantly, if you go by any CLSA, JP Morgan, Kotak or any note in the morning, they tell that the EBITDA hit for, Bharti and Idea could be anywhere between, 4 to 7% going ahead. 7% higher for Idea, and Idea is down by nearly 3%. But Reliance Jio will save nearly $500 to nearly $600 million, which means nearly 30 to 30 rupees per subscriber per month for Reliance. What will Reliance Jio do? Whether it will save the money and keep in their own kitty, or whether they will give freebies to the customers, because that will actually decide what the war could shape up in terms of telecom sector going ahead. For today, of course, we have seen a big recovery on Bharti, but I think most of the analysts on the street are still waiting for next step to go in terms of the telecom space from the big giant.
All right, thanks very much for that. Naveen tracking the tire stocks, and all of them seem to be buzzing. Naveen, tell us the news and the impact.
They're totally cheering the anti-dumping duty being levied on the Chinese imports. Remember, around 10 to 15% of anti-dumping duty has been levied on the landed price of Chinese import. Now, why is it important? We need to understand that. If you see the price differential between the Indian tires as compared to the Chinese imports was currently around 25%. So yeah, 10 to 15% gap is still there. But remember, the quality of the Chinese tires, that has always remained a concern. So there is some improvement that the Indians can do, and that will also benefit. Also, the other part that we need to remember is that this has come on the replacement market. So which are the companies which are benefiting? Clearly, JK Tyre is the biggest beneficiary. If you see in the tire and bus radial segment, especially in the replacement market, JK Tyre has a market share of close to 31%. Apollo has 24%. Meanwhile, CEAT has 13%. That is the reason why you are seeing the overall tire stock surging, led by JK Tyre. Back to you.
All right. Thanks a lot for that. And it's back to Ekta. Why are you watching Dr. Reddy's? And of course, it's one of the big gainers today.
Yes, well, multiple news points for Dr. Reddy's. Well, there are 2-3 pieces of news, so I'll just take you through a couple of them, where we managed to access the Form 483, which was issued to the company's Mirfield UK plant. It was inspected from 11th of September to the 15th, and there were 3 observations. Now, the details of these observations were not known, but these observations are quite benign in nature. They include procedures not established, followed, cleaning procedures or clean status not established, manually managed materials in warehouse not separated during storage. So that's a kind of relief rally that, these observations are not serious. Secondly, CLSA has come out with a report today where they've reiterated their outperform rating. According to them, FY20, Dr. Reddy's EPS has the potential of rising over 40% based on launches adding to their EPS. And lastly, there is, anticipation that maybe there could be big launches or big drug approvals around the corner for Dr. Reddy's. No confirmation on that, but nonetheless, the likes of Renvela generic would be closely watched.
All right, and over to Anisha then, who's watching all the power stocks. Anisha, why is it?
Just read out a few minutes back about the overpricing PIL that was filed years ago. Remember, this case has been going on for years, and that hasn't really been an overhang on the stock, but maybe just a bit of positive reaction coming in there. But what is an overhang for the power stocks is the short supply of coal. And I remember the government came out with the coal auction program, Shakti, and the awards are out. Adani Power has come out as one of the biggest beneficiaries, given the fact that they have secured around 1/3 of the total coal that was up for bagging. They have got got around 10 million tons per annum of coal, and they have given a discount ranging between just 1 paise per unit to 3 paise per unit on the tariffs that they currently have with the PPAs. Now, they have secured this coal supply for 25 years. Remember, the plants of Tiroda and Kabai were the plants that were running at low PLF level of around 60%. Now, and they were buying coal from the spot price. Now, the difference between the spot price and this price can be around 20 to 30 paise per unit, which is sizable when you look at a tariff number of around 2 to 3 rupee per unit. Of course, we'll have to work out the landed costs and work out how the logistics will pan out, but nonetheless a positive for them. Other than that, we have GMR, GVK and KSK Energy really getting more of coal supplies. KSK getting around 6.8 million, GMR 1.5 million ton and GVK bagging around 1.7 million ton. Separately, for the power companies, there's also going to be a cabinet meet today which is going to decide on electrifying the rural areas as well. Now, this is again a program which has been ongoing, and we have seen awards flowing in for the likes of Bajaj Electricals, HPL Electrics, Kalpataru, etc. So maybe a bit of positive for them as well. Back to you.
Okay, and we have reserved the biggest and the best for the last. Clearly, the most important news hitting the wires today is that Tata Steel's JV with ThyssenKrupp is well and truly signed and delivered. Nigel is here to tell us what is known and what is yet to be known, which he is, of course, going to seek from the management at 2 p.m. today.
Well, that's right. Lata, if you just take a look at it, this JV that has been signed between Tata Steel and ThyssenKrupp, the total turnover will be 115,000 lakh crores. So that's point number one. There will be a non-cash transaction. But importantly, both these two entities will transfer some amount of their debt into the JV. The workforce will be nearly around 48,000 approximately, and the total capacity will be 21 million tons approximately. But why is this JV good for Tata Steel? Point number one, it will help them pay some part of that debt that they have been sitting on. So that's very, very important. That's the most important part of it. We don't know that number till now, but that's the most important part of it. Now, the combined entity will have nearly around 12% of the total European market. So definitely there'll be a lot of benefits in terms of pricing, in terms of their hold on the European markets. And now the street will start bracing itself for some free cash flow, positive free cash flow that will come in the next couple of years. That's what will help them reduce debt even further going ahead. The Tata Steel Group, in fact, they have clearly stated that they are expecting synergy benefits of around 400 to around 600 million euros. So that's a tad bit higher than what the street was estimating, and that is very, very positive as well. They have indicated they're looking at deleveraging their balance sheet as well. Remember, synergy benefits could include R&D, it could include sales cost and the likes. The debt of Tata Steel, remember, has been soaring up. The consolidated debt has moved up by roughly around 30,000 crores approximately. But just take a look at the European operations. In the last 7 years, the debt increase in the European operations has been nearly around 22 or 23,000 crores approximately. So majority of the debt has gone up because of Tata Steel Europe. The combined entity really will do an EBITDA of roughly around $2 billion. How do we come at that? The big question is how much debt really will Tata will do an EBITDA of roughly around $2 billion. How do we come at that? The big question is how much debt really will Tata Steel transfer to that JV? Currently, both these two entities, if I just add up both those numbers, they're doing nearly around $1.5 billion in terms of EBITDA. Now the management is saying that we're going to be adding close to around 400 to around 600 million euros. So if you just, net that off and you add that number to the current $1.5 billion EBITDA that they're doing, they'll do nearly around $2 billion in terms of an EBITDA. Give it a multiple of around 3 to around 3.5 times. You'll say that the JV in all can support a net debt of around $7 billion approximately. How much of that really will be attributed to Tata Steel? How much of it will be attributed to ThyssenKrupp? That's going to be very important. Remember, ThyssenKrupp is far more profitable in comparison to Tata Steel. Well, we have a couple of brokerages up there. HSBC, for one, they said that if it's going to be the range of 400 to around 600 million euros, then they'll add nearly around 100 plus rupees to its target price. So that's pretty important. But Lata, remember, this is all going to happen in the next couple of years as well. Debt, how much is going to be transferred to the JV? Very, very important.
All right, we'll expect you all to get that news for us. But Kritika is also with us to tell us some of the other details she has picked up. Kritika,
Well, Lata, we've been speaking to the management and to Tata Sons as well. A couple of important points. Now, we've been able to clarify that the deal will be closed by the first half of FY18. So, all the cost synergies and the debt transfer, etc., that Nigel was indicating to will happen once that deal is closed, the quarter once the deal is closed. So, perhaps by the second quarter of FY18, the deal should be clarified. Remember, Tata Sons shareholders have to give a nod as well. Now, there was some confusion with respect to if the blast furnace is going to be a part of this. We have been able to clarify that the blast furnace operations of the JV companies will be preserved on all 3 sites of Tata Steel Europe. So that basically includes 2 sites in Netherlands and 1 site which is the main blast furnace site in Port Talbot. Now, just to put this into perspective into what this means for Tata Sons, this is the largest restructuring that has been done ever since N. Chandrasekharan has taken over. The key breakthroughs include Docomo resolution, Tata Motors restructuring, simplification of the cross-holding, which we just reported very recently, strengthening of the management team and function operations, and this Tata Steel restructuring will pave the way for Tata Sons to be able to simplify their operations in Britain and their international operations. And of course, it is paving the way for removing all the confusion with respect to Tata Sons eventually looking at moving out of Britain with JLR and with Tata Steel Europe. This has solidified their presence there, and they are looking at investing further to be able to grow.
All right, thanks very much for that to the entire research team for dropping by. A quick recap of all the top stocks which are buzzing. Tata Steel is at the top of the list. Power stocks like GVK Power and Adani Power. Telecom stocks like Bharti, Idea, Divi's Labs, Dr. Reddy's, and a whole host of those tire stocks, Sierra Polo Tires. You're watching Halftime Report, and now on to the biggest interview of perhaps the decade. The man who rarely speaks and the man whom everyone wants to hear. In a big CNBC TV18 exclusive, Chairman Emeritus of Tata Sons, Ratan Tata, speaks his mind, assures that the Tata Group is in very able hands under N. Chandra. So here's an excerpt of how Ratan Tata withstood tough times without taking any shortcuts.
Has it been tough to stick by these values, especially during times when values were being trampled upon because of politics, competition, blah, blah, blah? Were there times that you often felt that, thank God, we are not the shortcut Tatas? Because you could have taken that shortcut.
Yes, I'd be lying if I said there weren't moments when those issues came up and those decisions had to be made. Happily, at every time, boards stood together and leadership stood together in saying that's not what we do. We, over the years, on occasion, have suffered as a result of that. But on the whole, I think we have, I believe that it's very important to come back at night and say, I have not succumbed.
Because it's very easy to succumb.
Yeah.
I mean, you must have faced political pressure, economic pressures, and yet you stood the course.
Sometimes you didn't know if you were doing the right thing. All things are not black and white. You have a choice. One choice leads you down a certain path long term. Another leads you down another path short term. And then you have to weigh one issue against another. Hopefully you make the right decision. Sometimes we don't, but we do it with innocence or naivety rather than
manipulation,
intent and negativity. So I think that a sort of dilemma that faces many leaders in the corporate world or politics. So it does in the business community too.
Status quo for the market. So let's get talking with our technical analysts, Ashwini Gujral and Sandeep Wagle, who join in. Gentlemen, good afternoon to both of you. Ashwini, coming to you first for the index call. The stop loss on your morning call was met at 10,150. Since then, we've just been meandering in this tight range on the index. The Nifty Bank, though, at some point we thought was heading higher. What's the sense now for the second half, given that the Fed outcome is also awaited?
You did not read the call properly. the stop loss was for the Nifty futures. And that hasn't been met. The market is range bound. It was expected to be range bound. We are closer to the lows of the range, and because we are heading into an event, I wouldn't be surprised if we move 20 points higher, 30 points higher to the upper end of the range. So the idea here, if you Nifty and possibly trade it up for the next couple of hours, but overall fairly range bound, lackluster, and possibly only post the Fed event you will get a breakout. Well, as far as individual stocks are concerned, Bharat Financial is a buy with a stop of 960, target of 985. Havels is a buy with a stop of 510, target of 535. And Apollo Hospital is a buy with a stop of 1050, target of 1120.
Okay. Well, sorry to have interrupted you, Ashwini, but what I wanted to ask is that, you know, this is an invariable behavior of the market that before the Fed event, people tend to go long because the Fed has traditionally been dovish and kind to markets. But if it is such a predictable event, would it not already have gotten discounted?
Well, the market overall is in a bull market. So anyway, the basic push is on the upside. And whatever the Fed does, generally it is beneficial to the markets because out there, the tendency is not to shock the market. So that way, you know, generally people, the shorts are more jittery than the longs. So while we go into the close, anybody who went short in the morning, chances are will tend to cover. And hence we'll probably close closer to the higher end. Overall, you know, a bull market, all-time new highs, the force of buying continues to remain strong. So if you have to take a bet on either side, it has to be higher. Even if it is something mildly negative, you will see buying coming back. But for the day, for the next couple of hours, I think a bit of, you know, upside or rally can be expected.
Fair point. Well, let me get to Sandeep Wagle on the same issue. Sandeep, what stocks would you trade now?
Afternoon, Lata. I would go with a buy in a Bharat Financial, stop loss of 957, target of 981, and a buy in a Motherson Sumi, stop loss of 344, target of 360.
All right, gentlemen, thanks very much for joining in with your afternoon calls. Quick check on whether the European markets have opened, and it's a tepid opening actually over there ahead of the Fed rate decision tonight. So that'll be the key to monitor, awaiting the opening of the German markets. But as of now, the key trigger remains that. And of course, later on, the focus will also turn to the German elections.
Well, now, once again, to the big interview, perhaps for the year, for the decade for us, the man who rarely speaks and whom every one of us want to hear. In a CNBC Trading exclusive, Chairman Emeritus of Tata Sons, Ratan Tata, speaks his mind on a whole range of issues. Among the other things that he told us, he thinks that the Tata Group is in very able hands under N. Chandra. That's, I think, the point that everyone wants to hear. So here's more from Ratan Tata on Chandra and other group issues.
With halftime report, and it's a day when it's been raining exclusives. Shireen Ban caught up with L&T's executive chairman A.M. Nayak, who says that the engineering giant will restructure all non-core businesses over the next 30 months.
The restructuring is a 30-month period.
Okay.
Within which all the companies which or businesses we want to transfer or get rid of or close will be finished.
How many are likely to be closed?
9 or 10, not closed. Maybe sold or closed.
Okay. Sold or
10.
closed, 9 or 10. Okay. And what is then left balance?
It's still 72. Number of companies will reduce by 2.
Okay. Will reduce by 2.
2.
Okay.
And if we can reorganize, something which Sankaraman and others are doing under my guidance at the moment, is the development of project of power and the development project of infrastructure. If we can restructure that or get rid of it, we get 2 more down. And that's non-core. I really don't see any major investment forthcoming. because you can say 65% of those who invested heavily in the past are under financial restructuring with respect to banks to repay the loans and so on. And balance 30 to 40%, that cycle of investment is nearly over. And L&T, what facility we had to create from engineering perspective is already over. So people ask me, what are you going to invest on? So I said, if I find a fantastic opportunity to acquire, I'll acquire, but to the core, engineering only.
It's the weather that's on the radar, and rightly so. Mumbai has been reeling under heavy rains, but it's also the national deficit or surplus that Manisha Gupta worries about, and its impact on commodity stocks. Over to you, Manisha.
Well, absolutely. And it is raining in Mumbai, as you can see, and that's perhaps Marine Drive, Lata, and one of those amazing places. But of course, if you look at the numbers then, the 1st of June to September 19th, we understand that IMD has put out data saying that the monsoon is still 6% below normal there. And of course, the concerns have been of heavy rainfall that Mumbai has seen in last 24 hours. And whether or not Mumbai would continue to reel under that impact is what we really want to know from DS Pai, who now joins us on a phone line. Dr. Pai, hi, thank you so much for joining us. First of all, your sense on what the Mumbai can actually look forward to, because what we initially had was that 24 to 48 hours, there was a warning from IMD of very heavy rains.
After having heavy to very heavy rainfall yesterday, things have improved, and as of now, it seems that as far as the forecasts are indicating, the intensity of the rainfall will be very much less than yesterday. So almost only except for isolated heavy rainfall, it will be a normal type of rain.
Dr. Pai, also, there have been various reports saying that this perhaps is the withdrawal of monsoon, and that is the reason we are seeing these final showers. How would you put that out?
So far, the withdrawal has not been started. The low pressure area which is there in the over Orissa, so as for the forecasts are indicating, this low pressure will move towards northwest India. So once this weekends, only then withdrawal will start. So you can observe another spell of rainfall in the last part of this month again over this area.
It's not just Maharashtra that we're looking at. You also have warnings out for UP and Karnataka, etc., till September, till Saturday, Sunday, etc. What is your sense? I mean, as you said, the monsoon seems to be moving towards northwest. How much of a concern or of a heavy rainfall is there now?
The next 2 days, heavy rainfall are mainly over Chhattisgarh, Orissa, and Madhya Pradesh. And after these 2 days, UP and Delhi, that region, we should expect heavy rainfall. Otherwise, we are not expecting any heavy rainfall in the southern part.
What also is your sense on the final number? Because as you said, we are at the final leg of the monsoon by September end, and the rainfall overall shows 6% below normal. So would you say it's going to be around 94, 95% that we would conclude this monsoon season?
Yeah, it should be around 95 to 96%.
How are you looking at the monsoon showers going forward? Because, you know, some of the areas, when it comes to the deficiency and the flood part of it, would you say that the deficient rainfall for much of southern peninsula, Karnataka, Maharashtra now seems to be fading away?
Yeah, almost as per today's data, there is no deficient rainfall in any part of southern peninsula. And even Maharashtra, Vidarbha, we will be getting heavy rainfall today and some rainfall tomorrow also. So there will be some improvement over Vidarbha also. And Madhya Pradesh, we have got West Madhya Pradesh already, it has come under a normal category. But East Madhya Pradesh, it will still remain there because deficiencies of 28%. And deficiency over Northwest India, there may not be much improvement over that part.
So what states are we looking at as in sense of concern? Because the data that came in from the government showed that nearly 225 districts in 17 states perhaps were looking at a deficient monsoon. Do you see that turning around as we are headed towards mid-September now?
Yeah, this was some 1 week back or 10 days back. So they were mainly from, Vidarbha, Madhya Pradesh, all those parts. Now we have got a good rainfall activity over last 2 or 3 days. I think many of the districts situation might have improved by this.
Dr. Pai, also, a final few comments on Mumbai as well, because this is the second time in less than a month that we have schools and colleges shut. It's declared as a public holiday. You know how Mumbai gets under with that kind of a monsoon as well. What is your sense, especially now for next 24 to 48 hours? You've said intermittent showers, but how would you want to look at the next 1 week and until September end now?
See, today there will be only intermittent rainfall. The intensity will be much less than yesterday. And there may be rainfall again going till weekend, but subsequently the rainfall should decrease.
All right, Mr. Pai, thanks very much for that. Manisha, thanks for taking us through that interview as well. On our radar now are two stocks. One, of course, is NBCC. There's an order win. We'll get to that in just a bit. And quickly, let's also pull up the intraday chart of NALCO. That stock has seen a huge spike. Alumina prices sitting at a fresh 52-week high. Always works out well for NALCO. But let's focus on NBCC. They have announced a 4,000 crore rupee order win for a housing complex from the excise department. I think we should have the management joining us in just a bit. Mr. Anup Kumar Mittal, the CMD of NBCC, now joins in. Mr. Mittal, thanks very much for speaking with us, sir. Congratulations on this order. It looks quite substantial. What are the kind of margins on an order like this for a housing complex, and what would it take your order book to?
After this move. Hello, yes, what did you ask?
Sir, I just wanted to know that this order that you have received from the excise department for a housing complex, what are the margins generally that an order like this enjoys, and what would this 4,000 crore rupee order take your order book to?
It will take our order book to 80,000 crore rupees, and it will generate almost 8 to 9% margins on this project.
Okay, sir. Hi, this is Anisha. Thank you for joining us. I just wanted to understand, is it another PMC order for the company, or does it involve...
This is another PMC order, like 7 colonies.
Okay, sir. And this is in Delhi, right, sir?
This is in Bombay. This is Vatala.
Okay, sir. And what about the other update of the other commercialization of the property that was happening in the Delhi area? How has the response been for that one?
Excellent response. Excellent.
Okay, sir. And sir, you said about the 8 to 10% margins, but we have seen a lot of volatility in your margins coming in. They were a lot higher in the double digit in the quarters gone by. So is it an aberration when we see a double digit margin and it should come down to the 8% level?